Hello and welcome back to the channel. In this video, I'm going to see if Apple is a buy or sell at the current value using the Graham valuation. Without further wasting time, let's head to the Excel sheet where I have already written the formula and all the values here. And as you can see, the intrinsic value has the formula of EPS into some constant multiplied by 4.4 in dividing by the current AAA bond yield. If you want to understand about the formula and how you can calculate all those values, I have already made a video about this. Please click on the link below. So here what we can see that for the valuation we need the EPS and the current bond yield, which is 4.56. I have already filled out. And currently the price of Apple stock is at 148.50 and the EPS of the company is 5.89. So I'm just gonna put value of 5.89 here, and the growth rate of this company, which can change from time to time, and here you can use that for the next 5 years the price or the expectation for the growth of the company is 8.13. So I'm just gonna put here 8.13 here, and what you see here that by this Graham valuation the price or the intrinsic value of the company should be 140. The current price of the company is right now at 148.50, and if we give here 148.50, what you see here that there's a difference of around 5% between intrinsic value and current price. If we use a margin of, let's say, 10% to 15%, if you have the margin safety, let's say 15%, you want to buy this stock at $119. So what you see here that with 15% margin safety and your acceptable price is around 119, at this point you should not be buying the stock of the Apple. It's a bit expensive with a 15% margin safety. Since this is the Graham valuation original formula, there has been some correction made in this formula, and the second correction which has been made in this is that they have changed some constant from 8.5 to 7 and 2G to 1G. And similarly, I'm going to use the same value here and see if it's a buy or a sell. This is 5.89 we have seen. Now instead of 8.5 we have 7. Growth rate we have is 8.13. We have 2G equals to 1. Average yield is 4.40, and a current AAA yield bond is 4.56. By the way, this bond yield value you can calculate from this website, which is the Federal Reserve St. Louis here, and this you can see that this can change from time to time, and this is a very important influential value when it comes to investing in stock. And this is very important because what we see here that even with this modified formula the intrinsic value is even lower, and this happened because we have even lower value we have same value here, but we are using a smaller amount here, which makes the intrinsic value even lower. And if we give here the intrinsic the current price 148.50, you see now instead of 5% this is even 72% higher. And with our 10%, let's say our 15% margin safety, you want to buy the stock of the Apple with $73 price and not 148, which is very high. So that's why you see that the Excel sheet or this logic is telling you to not buy and sell this stock. And you need to remember that this is very dependent on current triple bond yield. And as I've shown you previously that if you use, let's say, the yield bond value of 2.31 here, it will change dramatically. If you use 2.31, now you can see that according to this yield value, the intrinsic value of the stock should be 169. And let's say if you want to use 10% margin safety, now this will tell you to buy instead of sell. So just remember that whenever you want to calculate the intrinsic value of a company, the current yield of AAA bond is very important, and this could change the whole your current price or your margin of safety and everything where you want to buy the stock of a company. Alright, so the question is, should you really buy the Apple stock at the current price? in my personal opinion, Apple is one of the best company, and you should not be worried about whatever the current situation of inflation or the interest rate is. Apple is going to generate a lot of revenue and profit at the end of the year, whatever the economic situation is. If you're a long-term investment, this should be a big opportunity. If the price of the stock, especially like Apple, is below, you should be buying more and more. But if you're a very short-term investor, I would ask you not to buy at this particular situation, because it's not very let's say a very volatile situation currently. The prices of the stock either could go very low, let's say 5 to 20% if something goes wrong, especially nowadays because of also interest rate hikes, and the banking sector is also getting hit a lot. If you're a long-term investor, this is a very good opportunity, but for a short term, I would just ask you to maybe wait for some better opportunity here. I hope you enjoyed this video. If so, please don't forget to like this video and subscribe to the channel, would be highly appreciable. My name is Adnan, and I'll see you in the next one.